What's up everyone? So now we've looked at fractals and how we use them on the 4 hour and the 15 minute. We've looked at kill zones, so you're understanding the rules of when we can and when we can't and when we shouldn't trade to make sure we're getting in with that manipulation and that kill zone session volume. We've also looked at how to map our ranges on the 4 hour, how to map our ranges on the 15 minute and why we map them and how we can use them for entry along with directional and making sure that a directional bias is making sure as well that we're trading the right half of the 4 hour MRL range. So now we're going to look at 50-minute entries, and once we've obtained our bias, we've looked at how to build our 4 hour framework. We've got our 4 hour bias, we know where we are on the range, we're coming up to session open, kill zone. That's when we want to be looking at the 15-minute, mapping up our 50-minute range and looking at entries in the right half of the range. Now again, we're either going to look at an external 15-minute range sweep, so a sweep of that 15-minute order flow range, that MRL, or we're going to see a larger range where perhaps we see some internal fractals printed, and we also can take entries when we sweep those and we see our entry criteria met. Both work, of course, test them both. You may only want to take externals, you may only want to take internals, but my advice is, and what I do is I take them both, because we never know when that which fractal or which liquidity point is going to hold for that session to trade away from that manipulation. So let's look at some examples. I think the best thing to do is just simply go back and we'll just say, I don't know, stop here or something. I'll do. And just see if anything presents that meets full criteria, looking at the entry models and building our framework for the 4 hours. So if we just start here, mapping out a 4 hour high and low. We've seen recently here, let's go to the 0200 candle. Okay, so we now map our 4 hour range. Zoom in a little bit, no need to scrunch out. The most recent break was this low. We've got one body close. Again, we would have had a reversal bias here, but this is out of session, so it's irrelevant. So we've had one body close, followed by a retrace. So we've gone from unconfirmed to the 6 AM close. What we see when we're doing our markup in the morning, this will give us a sweep bias. Okay, so let's look at the 15-minute and see if we get any valid buys. And let's map up our 50-minute ranges so we can look at internal and external. So again, we map them out the same, like we covered in the video, from most recent high to most recent low. So if we get an internal sweep in kill zone, for example, this low here, we can take this trade. It's internal to the 50-minute bearish leg. I don't know this price action, so it may not present, but trying to keep it real. Okay, so this was our range. We've seen one candle, so that would have been a valid entry to have a buy stop on the sweep candle. We've had an extended candle, so this is external sweep entry, 15-minute external range sweep. So we'd have a buy stop on the top of this candle. A further extended sweep, we're still in session, buy stop on that candle. Again, and you tagged in. You tagged in before 10 AM. So this would be a valid entry. And this is an external sweep, because we've seen this bullish MRL, this order flow range, gets swept with an extended sweep. Okay, an extended sweep simply is when we have the original sweep candle and we have no tag and we see a series of bearish candles. And of course, the opposite for shorting. Okay, if they're continually closing below each other, like so, and it's in session, we can just amend our buy stop from here, the original sweep candle, to here, to here, no tag, no tag, no tag, then you'd be in a position. As long as it's, again, by 10 o'clock. So I'm doing a loss. Forget to check with macros. Maybe just New York volume. Yep, New York volume, so a completely valid trade, one on tape. Remember the probabilities, guys. It's got over 50% strike rate, not 100%. So we've interacted with a 4 hour low. So let's look now what what we're seeing. So now we've had, this is the most recent fractal. We've had 1, 2 closes. So we move our fractal to here. 1 body, 2 body. So our bias currently is shorts from premium, unless we see this candle engulfed and we can look to play away from that intent, yeah, when we see price start to retrace. Because that'll be our intraday structure shift, where we see that order flow shift internally on the 15M, but looking at the candle break, that gives us confirmation when we see it close. Okay, now we've seen the last bearish candle in expansionary leg engulfed. We can now look for buys. Okay, we now adjust our range because we've printed a new fractal high, like so. That to blue. Okay, but again, we need to make sure that we are playing from discount, not premium, and we don't have, excuse me, this now, because we've seen 1, 2, 3 bearish candles. We can also play shorts. We can play both sides of the range because we've now got a confirmed intent bias. So this is where we drop into the 15-minute. Okay, so where's that current range? Well, we've got a super large range. It's from here to here. It's our 50-minute range. Okay, so we're looking for a sweep of that or something internal. At the moment, we've had nothing swept in London internal. We had some liquidity here, but didn't present a sweep and entry before 7:30. So simply be sitting on our hands. Okay, so we've had no sweep of buy side, no sweep of sell side, so nothing is presented either side of the range for counter trend or pro trend trades. So we simply now just fast forward to the next session. You don't need to look for a different bias. We're still inside the same range. Sales from premium, pro trend, continuation bias, or counter trend in discount. And if price comes into premium and comes back into discount, we can still take that trade because price trends. Yeah. Just because it breaches the EQ, just look at the data. It doesn't always mean that it's completely done there. So as long as you are buying or selling from the right half of the range, just remember to stay mechanical with that. Okay, so do we see a breakout? No, we're still inside this large bearish MRL. Okay, what time is this? 7:15, so the sweep's too early. Sweeping internal liquidity, so okay. So we've seen an internal sweep here. Look at where we are in the range, get the EQB. We're here. So we see, zoom in. See this sweep, sell stop below the sweep candle. So this is a standard sweep entry. It's not extended. It's the sweep candle that we're setting a sell stop, but it's an internal range because it's in a large MRL. But it's in session and it's swept fractal liquidity and it's in the right half of the range. So this is where we have to execute the trade. Stop loss between 1 to 2 pips above the high. GU, give it a little bit more breathing space. Generally, I try and add about 1 to 1.5 above my stops on EU and about 2 pips on GU. The same with setting your orders. Set your orders below, or depending if it's a buy or sell, 0.5 pips. That will prevent your broker from tagging these spreads. Okay, I've been caught out when price doesn't actually violate and break the candle, but spreads tags you in. So 0.5 pips or whatever your spread is, add that onto your sell stop. And of course, give yourself 1 to 2 pips coverage above the high. So you'll be tagged into that trade. It's in kill zone, meets all criteria. Nice, clean, 1 to 3, in and out. And a nice example of an internal range sweep. We see that fractal printed, and we sweep it at 8:15, just after London open. So let's continue by replaying again. We can still play counter trend trades from here. This was too early, this sweep. We're still inside this large sideways range. So internals is all we're interested in. Okay, so New York, we see a sweep off internal liquidity. It's in this large range. It's the only time we can pitch stuff to the left. Okay, only for in large ranges like this. So you'd have a sell stop below this candle here, and now it's past kill zone. So, but the idea kind of worked. Let's go back and find some more examples. So this is quite a messy bit of 4-hour price action, but again, we can still extract profits from market conditions like this. Okay, let's go to the O200. So perhaps there's New York shorts, 2 p.m. close. Okay, so now we've seen an external range sweep, just took out the MRO high. So this is where I'll be looking for a standard sweep, sell stop below the low, tagged into the position. It's in kill zone, but this is an external sweep because we finally swept the MRO. So I'm going to get 1 to 3 to the range low. No. What's that? So I'll give that 19 pips. You just get away with that. Depends how conservative you want it to be. But quite a large start. Well, there's your answer. Okay, so that would have been an L. We've now got a new range. We adjust it using the fractals and our box. You can see this was our MRL here, because this is the sweep candle. Then we broke that, so we swept that range. We're in kill zone, so this grey candle here, 1500, you'd have sell stop. Yeah. Cover the high. We go on to 3. Yeah, quite large, but you know it meets criteria. But it's late in the day, so you might close that for 1%, 8 o'clock. So still be a winner, overall. But again, just sideways price action, but we're playing the edges of the range. So let's just continue while we're in this range and see what opportunities we see. Okay, so we have 730 sweep. Let's look at the range. You could hold that trade if you wanted to, by all means, guys. Just monitor where you are. If you're around break even during spread hours or before 8, sort of around 8 p.m, close out your trade, because the swap hours increasing spreads is going to take you out more than likely. Okay, so we're still able to play both sides of the range. So we have London, we have an entry here. See, follow the range. Low break. So this was our bearish range here, from this high to this low. We see this extended sweep, 745. Now the initial sweep was at 0715, so that wouldn't meet criteria. The sweep candle, the original sweep must be from 730 onwards, so I wouldn't take that buy. Okay, we also have a sell. Where we've seen kill zone sweep, an external range sweep. So it looks like we may not have the risk to reward. Nope, no trade, not valid. We need to have room, guys. Good call. Range moves. Follow the fractals and the order flow. We have an external range sweep here, 1330, so sell stop below the low. Quite a small candle, which is nice. You can get a tighter stop. I do find with EU, anything between sort of 6 pips and 15 is a really nice sweet spot. For GU, anything around 10 to 25 is a nice sweet spot. Let's see what happens next. So you filled straight in and you tag straight out of that one. Okay, that would have hurt that one, but keeping it real. No entry and discount. Okay, let's fast forward to the next session. I'll pick this example as well, this 4-hour range, because I want to show you that you can still extract profits from the market, even if we are sticking to the same rules and prices, not very clean. As long as we're trading the right half of the range with the correct bias, then we can maximise on those opportunities until we break the 4-hour high or low, and then of course we have a different scenario to play with. Okay, so 7:15, a little bit early because of that reason there. Again, you see there's fake moves, so we're in premium. It's the EQB, so not interested in looking for any longs, and we're looking for sells. We are pro trend still. This is our bearish 4-hour range. Let's follow the 15-minute ranges. So we see this candle here, 0845, sweeps this external range but doesn't give an entry. We see it extended, so we'd have a sell stop underneath the next candle. You'd be filled now with that retrace. Plenty of room. Ooh, I've got it sporadic. So Euro news. Nope, just good old London volume. Okay, so we adjust our range like so. Most recent break, no. Let's see. Back to the next candle, so 0200. See where we're at. Okay, so we've seen intent, right? We've seen 1, 2, 3, 4 candles. Okay, now you want to be looking for buys in our most recent range, like so. Or wait for the candle to be engulfed, and then we can play counter trend trades. So at this point here, when we see that last bullish candle get engulfed, that's when we can look for counter trend plays. So quite impulsive, price is not doing or presenting any liquidity for us. We're out of session now, and we've now taken the low. So interaction with the 4-hour fractal, so let's fast forward to the 0200. Okay, now we've got a new bias, so we can look at shorts. We've seen interaction with longs rather. We've seen interaction with 4-hour low. We've swept it, but we've got a reversal bias. Let's drop to 15M. We're in the right half of the range. See what happens with London volume. Okay, so our range would currently be from this low to this high. Waiting for price to come back into discount. Seen a wick, seems to be out of session. Okay, so we've currently got a reversal bias. Bit of the old range with the EQB. Let's drop to 15-minute. Let's see if we see any internal initial sweeps, standard sweeps, or any extended sweeps. Looking at internal and external. We have quite tight order flow here, so this would all be like so. So the old range would be here and here. We sweep this new range. Okay, so we see a sweep here. Break it. So this is an internal sweep. This is the liquidity internal to this MRL here, from this high to this low. So valid internal, sell stop below the low, it's in session. Let's double check if that was macro related or if it's real PA. Macro related. So you'd have an entry, a sell stop below this low, and if the news was at 13.30, you would closed out around here, maybe 2%. So again, we see this sweep happen inside of the range. Okay, this does provide an entry, but unfortunately it's news. So that's how we follow the 15-minute ranges. Now, win, lose or draw, guys, it's, you know, the probabilities, you'll see that in your testing, the win rate and the consistency does its talking. But just looking at these examples here, we had 1, 2, 3, 4 losses and 1, 2 winners. So you'd be up 2% for these. To 20, so about 8 days you'd be 2% up. And this is just by simply following what we want to be looking at on the 15-minute, which is following our order flow ranges, using our boxing and our fractals to help us map that out. Then either waiting for the sweep candle in kill zone to have a sell stop or buy stop order a few ticks below. Whether that's internal or external of the MRL, it does not matter as long as it's in kill zone, or an extended sweep when we see a continued sweep. So we see that sweep candle, then we don't see the retrace, we just see further higher candles, then we just follow that. We move our sell stop to the next candle, to the next candle. Sometimes you may get tagged in and it might continue higher. Sometimes it's part of the game. But generally when we see that candle break, like we do on the 4 hours counter trend, then our option for playing counter trades, that's when we see that order flow shift on a lower time frame. So we're getting tagged into that order flow shift, that momentum shift. So again, same as the 4 hour guys, map out your 50-minute ranges, and I would advise starting back in January 22 just to get as much data as possible. I'd advise minimum 6 to 12 months, if not more, on each pair before you take it live and get comfortable with it. But overall, you'll find it, I think, very easy to follow, easy to backtest. I will drop a clean backtesting template that I've made just for this high time frame entry model, and happy testing, guys. We'll be covering a lot of the sort of Q&A stuff on the lives over the next couple of weeks once everyone's give all of the content videos a watch, and hopefully you guys will be continuing to smash it as you already have with the information that you've got. So hope this short course has helped give you some more clarity, but of course any questions at all, please just drop me a message or a DM and hit me up and I'll get back to you.